Cashflow Diary Podcast, episode 29.
Congratulations, you showed up. Give yourself a high five in celebration of your success. Welcome to the Cashflow Diary, where new and experienced investors come to take confident action towards their goals. Your host is a family man, a real estate entrepreneur, investor, coach, and instructor. As a master facilitator of Robert Kiyosaki's Cashflow 101 game, he's inspired many to begin their journey into creating cash flow for themselves and their family. And now, here he is to offer you the tools required to earn the income desired. Your cash flow coach, Jay Massey.
Well, hello there. Welcome to another episode of the Cashflow Diary Podcast. Glad that you are here. I am all the way in a small little country by the name of Estonia right now. And if you don't know where it is, look it up. It's got some interesting things that I think you should know about. This is your first time joining us here on the Cashflow Diary Podcast. Feel free to go over to learninvestingnow.com. Get your free e-course that'll begin to teach you how to become a wholesaler. That's learninvestingnow.com. If you don't know what wholesaling is, it's just a way of being able to buy and sell real estate using none of your own money or credit. That, could be the solution to your particular financial situation. I know it was for ours. If you want more information, though, on our original situation, feel free to go over to episode 1, download that, listen to it. It'll tell you everything you need to know about me and the format of the show. And if you have any comments anytime, feel free to call in at 800-689-1764, 800-689-1764. So I want to jump right into this particular episode so that I can do my best to hit the time limits and make sure that you get the information that I'm trying to deliver today, because it's an interesting perspective, I think, on some of the things that are going on in the U.S. and the government. Today, we're going to be talking about how to raise money for real estate investing and, most importantly, avoid the effects of a government shutdown. To start that, though, we're going to start with a quote. Now, I should preface this by saying it's just a quote. It doesn't mean any particular political affiliation with the gentleman, etc., nor does it not mean that. It just means I think this quote is very, very important. So, put that aside for a second and just listen to the words. The quote is as follows: "Dependency is death to initiative, to risk-taking, and to opportunity. It's time to stop the spread of government dependency and fight it like the poison it is." Some of you may know who that was. It was said by Mr. Mitt Romney, Willard Mitt Romney, if you will, an American businessman and politician who served as the 70th governor of Massachusetts from 2003 to 2007 and was the Republican Party's nominee for president in the 2012 election. Here's the point. If you and I are dependent on something, it means if that something is removed, we are no longer able to function. Whether that's government, whether that's drugs, whether that's a job, whether that's a person, whatever it is that you're dependent upon becomes a place that could become weakness. And occasionally, like if you've ever broken a leg or a bone or something of that nature, you end up in a situation where you're on crutches. You are now dependent upon crutches. Remove the crutches and you no longer can move around. And in that situation, one of the things that we are always striving to do is to get better. We hate being on crutches. We hate that feeling. And I'm just saying, I find it very interesting that he said this as it relates to the government. So today, as I said, we're going to talk a lot about how to raise money for real estate investing and avoid the effects of a government shutdown. What does that mean? I think there's two major things. You got to look at what happens if it continues, and more importantly, why you might want it to continue and how to profit from it. So we're going to take those two particular sections and we're just going to kind of go for it and see where we land. So especially this first part comes to us a lot from our Cash Flow Foundation series. So if you are already a premium member, or if you're already a part or have downloaded the ebook, you know that you get access to Cash Flow Foundation, and you may have watched this video, etc. But we really have to think about and talk about one of what I call, or what's been called, the core beliefs of what it's necessary to have businesses. And one of those beliefs are as follows: is that your business needs customers, but not any one customer. So, and that's a very beneficial belief, because if you feel like you need a particular customer, you may act a certain way or overact in a certain way, which doesn't allow you the freedom to say no. And occasionally you may want that freedom. In fact, often you may want that freedom, because if you're forced to deal with any one particular customer, now the customer has the quote unquote upper hand, and you have to deal with them on their terms, which in some cases may not be so bad. But one of those things that your business needs is a customer. A customer, by definition, must want your product or service. And I think we all understand that. But the part that we're really going to drill down on is they've got to have the capacity or ability to actually pay. What happens to that person? I don't care how much they want it. They could want your, 2-bedroom, 1-bath apartment building. They could want your single family house. They could want, your commercial space. They could want all of those things. But if they don't have the ability to pay, that doesn't mean that you've priced it too high. It just means they don't have the way to pay you. It's properly priced, but they don't have the way to pay you. Well, once that happens, your business becomes weaker, and more importantly, a weakness has been exposed. For example, could you imagine a retail business today that doesn't accept credit and or debit cards? Just think about that for a second. How much business would that business do if it no longer accepted credit or debit cards? Now, that doesn't mean they'll go out of business, but would their revenue increase because they don't accept debit or credit cards? How many of you listening to me right now, all you do is your transactions on debit or credit cards, and you haven't seen cash or a $20 bill in like years? You don't even know what they look like anymore, right? Because we all tend to use more and more credit and debit transactions. So think about that for a second. If your business suddenly no longer, like for example, for whatever reason, all the credit card companies just quit, what would happen? How would that work for your business? And that becomes a business weakness. And that's what I want to drive home here. When your business, for example, is dependent upon the government willing to loan money to the housing market, that can become a weakness, i.e. a government shutdown. So if the government stops lending money, you say, how does that work? Well, it's not that Fannie and Freddie necessarily depend on the government to lend money, but they do depend on the government for the verification of things like income. Because, clearly every person on the planet will truly state the exact dollar amount that they earn, right? So there's no real need for verification. Clearly, I'm being silly. However, if they're unwilling to lend money until that verification happens, there's a choice that the business now has to make. They have to say, well, if we lend money, we run the risk that Fannie and Freddie, who are the number one purchasers of our loan, may or may not buy it. If they don't buy it, that means we have to use our own cash. Well, good, we have some cash at the moment. How long until we run out of cash? How many more loans do we want to keep processing? And then what you can begin to see is this decision that goes, you know what? We've done enough of these, and we're not willing to take on any more loans because we don't have anyone who can buy them from us to replace the cash. That's where the government shutdown begins to have an effect on you and I in terms of the housing market. And that's something that you got to be concerned about, or at least aware of. So think about this. If you're a fix and flipper right now, or any sort of person that buys and sells short term, this effectively stops your business. Because typically in that situation, you are looking for that person who is a retail purchaser. That retail purchaser typically is looking to use their credit card, right? Their credit or debit card. That's what they've got to use. But all of a sudden, they don't have access to their credit or debit card anymore. And you're looking there going, well, I'll take cash. And they're like, I don't have enough cash for that. That becomes an issue. That's a business weakness that's being exposed. As a wholesaler, you still have the same issue, because I know you can think, well, I'm just a wholesaler, so no big deal there, right? Well, the fix and flipper may have cash, but they're looking at the other end of that transaction of, well, I could tie up all my cash, but I don't have someone to buy me out at the end. And therefore, I'm not going to take the risk of going ahead right now when I can't see or foresee the fact that I would actually get a buyer, especially if the fix and flipper is inside the FHA guidelines for their housing. Now, here's the exception. There's an exception to that, right? The exception would be if you're working in the jumbo loan market. So if you're working in the higher end market where Fannie and Freddie typically didn't play anyway, you probably have a good shot at continuing business. So maybe if you're doing 6, 7, 800, 900, $1 million houses or property, etc., you're probably fine. Commercial property would likely fall into the same category because that's not where they play. So where the government isn't, you probably still have great business opportunities and prospects. You still have your buyers. Everything is still working. You're not going to feel those same effects. But these are the things that need to begin to go through your mind is what happens if this continues? Do you just suddenly quit and not do business, or do you find a way around it? And we're going to talk about some things that I've been thinking about as ways, quote unquote, around it. So what about the buy and hold person? Well, you still can be affected here as well, depending on whom your customer is. So if you are heavily dependent, if your portfolio is heavily dependent on government subsidy for the payment of rent, not the sourcing of your tenant, then you have an issue as well. Because where are your tenants going to get their money from if they've been getting it from, Section 8, etc.? Now, many of you know or understand that I work a lot with a lot of government agencies, etc., but we are primarily using them for the sourcing of the tenant, not the payment of the rent. And that's a very key distinction in this particular case, right? Is because you got to understand where their money comes from. So long as their money comes from a job that's a real job, but based upon a service or a product that customers want and need, there'll be an exchange of value there. There'll be a wage there. There'll be something there that you can continually use to pay whatever it is that you need to pay. The point is, you need to be aware of this because it becomes what I guess insurance companies would call an adverse risk, where it doesn't mean that it's not good to do business in that direction. It means you may have too much exposure in any one particular direction, and therefore it's adverse for you and or your company to continue to do business in that same way. So you need to be aware of that. We need to be aware of that, but you're the business owner and need to understand that the markets aren't static. And part of that is understanding how, the headlines can affect you in the future. Now, right now, listening to this, you're probably thinking, okay, whatever, no big deal. And you're right. It could be no big deal so long as everything gets figured out before it actually, begins to compound and these effects keep going. So, it's just something that I was thinking about. Not necessarily something that I'm saying, obviously I'm not prognosticating and saying this is what's going to happen, gloom and doom, but these are the effects of what could happen, when it comes down to if it continues, just something to think about. All right. With that, let's go over to our cash flow question for last episode and the one for this episode. For those of you wondering what that means, we do a cash flow question every episode just to give you the opportunity to win a copy of my upcoming book, Cash Flow Creation System, which I go through my entire business model. People often ask us, how is it that a few short years ago you guys were squatting in bank-owned property, technically homeless, but now you have a portfolio of real estate that goes over 5 different states. You're doing commercial stuff. You get to go to fun, fancy places. How did you do that using primarily none of your own money or credit? Well, it's in the book, and that's why a lot of people want it. And you get an opportunity to win a copy for free. So if you want more information on the book, it is cashflowcreationsystem.com. But let's talk about the cash flow question. Last week, I asked, when building your business, real estate or otherwise, which team member is one of the first, if not the first, you should look to bring aboard? Because we all know that, wealth is a team sport, right? At least that's a core belief that I believe you should absolutely ingrain into yourself. You can't do it all yourself. So you need some quality assistance. That quality assistant, in my mind, that person you should be looking to bring aboard first should be that CFO, accountant slash bookkeeper, something in that particular area. Because, and understand, there is a difference between a CFO, there's a difference between an accountant, and there's a difference between a bookkeeper. Jokingly or very clearly, often, a bookkeeper's job is just to put the numbers in the books. The accountant's job is to make sure the numbers that are put in the books are right. And what I like about, working with my CFO is that she's so much more than just putting the numbers in the book. She's a lot about strategy and making sure that we can increase profitability and making sure the deals do what they're supposed to do. Everybody gets paid, keeping us SEC compliant, et cetera, et cetera, et cetera. And one day, that's something you should definitely look forward to. Understand this. Any person you bring on your team, you may pay them a significant amount of money, but they shouldn't cost you or your business anything. I'll say that again. Any person you bring on your team, don't begrudge paying them a significant amount of money. But understand this, they should not cost you or your team, your business, any money whatsoever. So what does that mean? That means I tend to look at people in two different categories, either offensive or defensive. My offensive people are going to be the ones helping to bring in revenue to the company, and the defensive are the ones that are going to be saving the company money. So that means an offensive person should bring in more revenue than their salary or expense or whatever it is that they cost the company. Whatever that number is, each person. So if you pay someone, and I'm just making up numbers here, but if you pay someone, $75,000 annually and they're on the offense, they need to bring in more than what you or what you're paying them. And therefore, they don't cost you anything. And the reverse is true when it comes to the defensive individuals. So the defensive individuals are typically on the operational side. And what happens there is that they should begin to save the company more than what they cost. So if you then pay someone $75,000, but they're on the defensive side, you should see a reduction in your expense categories, whatever those expense categories are, that is greater than their salary. And you keep that in place. But as I've said before, when building your business, one of the most important people to bring aboard earlier than you usually think is that CFO, accountant, and or bookkeeper. All right. This week's question, feel free to send in your answers to cashflowquestion@cashflowdiary.com. Again, that's cashflowquestion@cashflowdiary.com, or you can call it in at 800-689-1764. Again, 800-689-1764. And here's the question. If you have one part of your business system that, if it fails, stops the entire system from working, what is that called? I'll say that again. If you have one part of your business system that, if it fails, stops the entire business system from working, what is that called? So send in your answers to cashflowquestion@cashflowdiary.com, or call it in at 800-689-1764. And make sure that when you do send in your answer, that you give us an address, because we can't email you a physical book. It doesn't work like that. All right, let's get over to some of the solutions or opportunities that I see from this particular government shutdown. And I think in some respects, if you currently are a net buyer of real estate, you should want this to continue and how you can profit from it. If you are listening to my voice and hoping that you could find your way in to real estate, in fact, things like a government shutdown can actually be very, very beneficial for you. Because at the core of this, what you and I do as real estate entrepreneurs, as entrepreneurs in general, is that we look for problems. As it comes to real estate, we look for problems, not properties. So I want to find people who have a problem. What are some of the problems that can occur when their customers don't have the capacity to pay? Well, someone not having the capacity to pay or ability to pay doesn't mean that I don't want to sell. It just means I can't. At least I can't in the traditional way. So say you're a net buyer in this particular marketplace. One popular way, in my opinion, to purchase property is to actually raise the capital from private individuals. And then to the seller, what ends up happening is that they receive the cash that they were expecting in the first place. So that could be a very, very popular way. It's you could use that with one person or multiple people through a syndication, etc. And honestly, it's how I've done the majority of my deals. I don't think I've ever gone to the bank to do on a purchase side to be able to buy anything. And that includes, hundreds of single family houses, now hundreds of units that are, in various states in terms of, apartment complexes and commercial property. Now, on the refinance side, completely different story. But again, even then, it doesn't have to be. Say, you're saying, well, I just need a refinance. Well, guess what? You can still raise the capital to do your own refinance as well. All right. So that's definitely one way to still, quote unquote, profit, or more importantly, transact real estate in this particular case. So let's keep going. Here's another way. Banks in this situation, because banks make money for making loans. And even though they don't have their big buyer, Fannie and Freddie, they're still looking to make loans. So banks will, by default, whenever Fannie and Freddie come back online, they're going to buy a lot of those loans that have been made. Because the banks are taking the gamble, like, we know what we're doing. We know what Fannie and Freddie buy, so we'll go ahead and buy it and take the risk and just wait for them to come back online. That way we don't stop. That makes sense. I hear that. But there will be a percentage of those loans. I don't know how many, but there'll be a percentage of those loans that Fannie and Freddie goes in, nah, we don't want those. And I'm willing to bet that the banks, especially the small regional banks, won't want to keep them on their books. Well, what does that mean? They're still going to be wishing they could sell them. The only question is to who. So guess what? It creates another opportunity for you to raise capital and purchase those loans from local regional banks. And the good news is that local regional banks typically do real estate near their local or region. So for you, it gives you a unique opportunity to develop relationships with high-level officials at a bank that you could then carry on for years, decades, etc., to have your own unique way of acquiring deals and property. Just a thought. Here's another one. So fix and flippers, wholesalers will need to work more with cash-only buyers, period. Now, if it's a cash-only market, this should have the effect of lowering the purchase price as well as the sales prices in various markets. It should have the effect of decreasing volume and also extending the days on market, how long it takes for something to sell. Now, depending on how long that goes, I think we could reasonably expect an increase of profit per transaction, especially in the buy and sell situation, and increased rent per square foot, simply because it'll be more difficult and therefore there'll be less available that can be provided to actually go out there for rent or for sale. So what ends up happening is that, you've got something that's scarce in the market becomes more valuable. Things that becomes more valuable tend to increase so that you have the opportunity to profit more, which I think is not necessarily a bad thing either. All right. Additionally to that, if you think about builders, if builders can't finance, they don't build. So therefore supply does not increase. But that doesn't stop demand. It doesn't stop us from making more kids or for kids wanting to move out or for people just wanting to move up into bigger, better housing. So all of that is a process that has no effect or that does not slow down or shut down just because the government did. So think about that as you keep going. And then one of probably the most profitable areas to be educating yourself in right now. In fact, it's probably the most profitable area you should have been educating yourself in for at least the last 5, 6, 7, 8 years. And it's how I've been able to do the business. And I'm very grateful that, for all the things that we've gone through, the one gift that I was given is understanding how to do creative acquisition, literally how to buy and sell real estate using none of my own money or credit. Understanding the difference between a seller finance, purchase money mortgage, land contract, lease option, etc. There are many different techniques and many different names, master leases that you could use, but all of it means how can I control and own real estate and so that I have the opportunity to go out there and profit. And many of those techniques are again covered in the wholesaling manual, which you should be able to get, again, completely free at learninvestingnow.com. Just put your email in the box and it'll start you on the course where you also get not only the books, but you're going to be getting videos that go through my explanation of all of how to do exactly those very, very things. So anyway, one of the things that I want to leave you with, just because the news, maybe CNN or your local newspaper or what have you, frame or say something and it sounds negative, that doesn't mean it is. It doesn't mean it is at all. In fact, problems are the source of opportunities. Until next time.
Thank you for investing your time with Jay Massey and the Cash Flow Diary. When you have a moment, please visit iTunes and leave a positive comment about the show. And go now to our website, cashflowdiary.com, to take advantage of our free business building course, Cash Flow Foundation. Gain the knowledge, understanding, and skill that will teach you how to never need a job again. Until next time.